Good afternoon. This is Tom Asbury with the Viper Report. It's Sunday, May 31st. In last weekend's contribution to Forbes.com, I talked about the mixed sector performance in this rally as well as in past bear market rallies. I featured this table which looked at the May performance of the key sector ETFs. You can see that consumer discretionary up 10.82% and technology up 9% were the two big leaders. And also on the downside, consumer staples, real estate, and utilities were all negative. It's certainly been a case of the have sectors and the have not sectors. In 2008, this comparison chart shows that the XLF here in black had topped out ahead of the XLK, which continued strong into June of 2008 before it also collapsed. The XLV, the healthcare, it was remained relatively flat. I use this as well as a number of other technical tools to determine which ETF to be in and when to get out of and rotate into other ETFs. In 2020, you can see it sort of a similar pattern up to last week. XLV has been flat, XLK technology has been moving sharply higher, and XLV was forming lower highs, though that changed a bit last week. After the close on May 22nd, there was a marked improvement in the advanced decline analysis. You can see this chart of the NYSE Composite shows this bullish zigzag pattern in the NYSE All AD line, one of the key ones I follow. And as I noted, there were 2,656 issues advancing, only 384 declining. That put a bullish cast on the stock market as we entered the holiday shortened. In Tuesday's Viper ETF report, I focused on this long-term chart of the Russell 1000 growth, the IWF, versus the value IWD, showing that growth has accelerated to the upside since the start of the year and in my view was quite overextended. I also talked about, as part of the market section, the latest survey by the Bank of America fund managers that most continue to think that value will lag growth going forward. This to me looked like an imbalance on a short-term basis and favored trading positions in value over growth. This daily chart shows you the spread and some of the momentum indicators I use that have been diverging from prices. This is a classic bearish divergence. That's when you compare an indicator to the price. Prices were moving higher and higher and higher from March into April, but the PMO and its histogram were forming lower highs as indicated by lines B and line C. That meant a change was likely, and that has been the case this past week. This week we have a fairly full economic calendar. We get the ISM Manufacturing Index on Monday, construction spending, and then of course we get ready for the big jobs report. ADP leads it off on Wednesday, as also we get the service centers number. Most of these are expected to come in quite weak, but lately the data has been not quite as bad as most expected. One thing I noted last week on Friday, consumer spending was down a bit more than expected, down 13.6%. It was only down 6.9% last month. Also, Chicago purchasing managers, that's quite a weak number at 32.3, and the consumer sentiment came in at 72.3, a bit lower than most were expecting at 73.7. Part of my concern over the strength of any economic recovery will be that consumers will stop spending, save more, and that the rebound that most stock market bulls are anticipating will not materialize. Of course, on Friday then we get the non-farm payrolls and the unemployment rate. Last time it was 14.7. Look for even a higher number this week. The market has been ignoring companies that don't provide earnings or forecasts, and also seeming to shrug off most of the economic data, one wonders how long that will last. If you're interested in learning more about the financial markets, I suggest you go to viperreport.com. I post a number of my articles there as well as on Forbes. Also give some educational articles. That's a big part of both the Viper ETF and the Hot Stocks Report. If you're interested in subscribing, you can click on one of these links. You get at least 2 reports a week, plus 6 trading lessons to help explain some of the methods I use, and also help you set them up on a low-cost website if you're interested in learning more about technical analysis. I hope to touch base with you before Friday's jobs report. Hope you have a great week. Thank you.